on the Chad Slagle Show, coaching you to and through retirement.
We're going to discuss the importance of following your intuition when it comes to making big life decisions.
And on our Coach's Corner, we're going to discuss some critical questions to ask when interviewing new advisors or speaking with your current advisor.
And on our Chalk Talk segment today, we're going to help you determine how and when to know when you have the right advisor for you.
So sit back, relax, and learn. The Chad Slagle Show starts now.
I'm Chad Slagle. I believe financial planning is about educating people and empowering them to make better decisions with their hard-earned dollars. Coaching gives me satisfaction from watching a player succeed and get better. You need an experienced team around you. The best coaches have great assistant coaches. I have brought a lot of the techniques and structure I learned from playing and coaching football and apply them to the world of investing. My goal now is to coach as many individuals and families as I can on how to get successfully to and through retirement.
Welcome into the Chad Slagle Show, coaching you to and through retirement. I'm Wendy Erickson here with the coach, Chad Slagle. Today on the Clipboard segment, we're going to discuss the importance of following your intuition when it comes to making big life decisions.
You know, as you know, Wendy, my oldest son is currently a sophomore at the University of Mississippi. My oldest daughter, who is now a senior in high school. So for the last few years, we spent a lot of time touring colleges and universities in Illinois, Tennessee, Mississippi, Kentucky, really all over the place. And all of these colleges and schools are accredited. They all offer similar degrees. All of them would be respected, you know, to have a resume from. So when my kids enter the workforce, they'll be ready. But they all have something a little bit different. You know, when we think about Ole Miss, and I think about my son Grayson, when we walk through the Grove, the big area there at the school, and I could just tell in his eyes there was something a little bit different about this school. And as we explored the town, something clicked into place. When we left for the drive home, I could tell he was sold before he even told my wife and I. As we have visited Grayson over the past couple of years now, of course, with my daughter being a senior and going into school now, there was just something about that school, that campus, that made her feel at home as well, which is good for us, right? We have two at the same place and we're not going all over the place. So we all know that feeling when your gut is pulling you in a direction. And we also use it, whether we know it or not, when it comes to making big decisions. You may be thinking that intuition and money are not or shouldn't be related, but that's not the case. Often financial decisions can be based on logic, numbers, and facts, but the deciding factor is about your intuition. When you meet with an advisor for the first time, you can tell pretty quickly if they are someone you want to form a relationship with, and if someone you feel you can trust with your hard-earned dollars. Like they say, when you know, you know. But before you sign any paperwork to make that financial relationship official, we're going to talk about today 3 critical things you need to know about your advisor and questions you need to ask to educate yourself and make sure that not only the intuition, but make sure the facts and what you're making is the right decision for you and your family.
Well, you know, I rely on my women's intuition all of the time. But I'm in a different phase of life than you are. I'm a pre-retiree, and I use that same intuition when my parents were looking for a retirement facility. And, you know, they moved into one. It's been about 2 years now. And I went through a couple of them, and I got a feeling from one of them. And that's the one that they ended up moving into, and they're very happy. So that's important in making a decision, to me at least.
Absolutely, and even though they all have beds, they all offer the same thing, it was that one thing that kind of clicked for you.
Gut feeling.
Which is very important. But you also have to understand the pros and cons to each decision that you're making, the ins and outs, and making sure you're making an informed decision. And this is the same thing, again, as when it comes to choosing an advisor or a firm to help you not only get to retirement, but to get you through retirement, through that whole journey. And that's what we're going to talk about today, and really 3 critical questions you need to know, and you need to ask yourself. You need to ask your current advisor, but also you need to ask the new advisor if you're looking for a new firm. And again, making sure you educate yourself and know the answers, as well as having that intuition and making sure that you know that it's a good fit for you.
Well, retirement is certainly another big life event in addition to college and retirement homes. So we need to pay attention and hear what the rest of the show has to say. Lots of questions. When we return on the Coach's Corner, we are going to discuss some critical questions to ask when interviewing new advisors or speaking with your current advisor. We'll be right back.
The number one concern of retirees today is outliving their hard-earned dollars. It is more important now than ever to educate and empower yourself to make better decisions with your monies than it has taken you 30 to 40 years to accumulate. How do you do this? By using our financial GPS, our guided planning system. This is a 4-step process to help get you successfully to and through retirement. The first step in this process is to create clarity. Here we will help identify your goals as well as your concerns and identify what you want to accomplish in retirement. The second step, we will analyze the risk you're taking with your current portfolio, and this step will also identify exactly what you are paying in fees. In the third step, we will evaluate and assess your current plan and help identify the gap between the missing pieces. And in the fourth and final step, this is where we will work together to implement a plan of action to accomplish your retirement goals. And this process can take place at any one of our convenient locations in Missouri, at our Creve Coeur and Sunset Hills offices, or in Illinois at our Edwardsville, Springfield, and Jacksonville locations. So call now to get set up on the right path on your journey through retirement.
Welcome back into the Chad Slagle Show, coaching you to and through retirement. We are back with the coach, Chad Slagle, and his colleague, Chad Tobin. And today on the Coach's Corner, we're going to discuss some critical questions to ask when interviewing new advisors or speaking with your current advisor.
That's right, Wendy. There are many types of advisors out there today in this financial and this crazy economic world that we have right now. And there are many important questions that you probably need to know when it comes to choosing the right advisor for you. People skills are important when it comes to getting financial help. You know, financial matters are highly personal, so you need to have basic comfort level with any individual you're entrusting to help you out. But you also need to conduct the diligence before signing on with an advisor and understanding your needs in retirement and identifying an advisor who can help you meet those needs. Remember, retirement planning is much different than investing when you're younger in your 20s, 30s, and 40s, just pumping money into your 401k. So you have to take a different approach to this phase of life. And today, we want to help you uncover a couple of key questions that you should be asking in order, Chad, to find that right advisor for you.
Yeah, and I think one of the biggest mistakes we see is a lot of retirees or pre-retirees, you know, they continue to work with the same advisor, the same firm, you know, that got them to retirement, and they continue to work with them through retirement. And that could be one of the biggest mistakes because there's so much more you have to do, you have to prepare for and plan for when it comes to that retirement phase of life.
All right, well, let's jump in and ask what those questions are.
So number one, of course, how do you get paid? How does your advisor get paid? Or how do the new advisor you're looking for to work with get paid? You know, there's different ways that advisors can get paid, and this is something you need to know. Many advisors will charge you fees up front in the form of a commission. And a lot of you sitting at home, you may have mutual funds. So you have an A, B, or C share. And with a lot of these A share mutual funds, you are charged a load right up front, Chad, of anywhere from 4 to 6% off the top of your investments before your money ever goes to work for you. So you're given 4 to 6% up right up front before anything happens.
And you know, a lot of times we ask people that and they had no idea they paid that load. And so I think it's so important to understand, you know, how your advisor is getting paid. The last thing you want is anytime you're buying or selling an investment that they're making some kind of commission because of that. So just understanding how they're getting paid.
Sometimes I have trouble asking people questions like that, but I guess something this important, I got to get over that.
And you have to, because it's your money. This is money that you've worked all your life for. And like you said, going into retirement home, you probably ask a lot of difficult questions before you put your parents in there, right? It's the same thing when it comes to your hard-earned dollars, money that you have to make sure that lasts throughout the rest of your life when you retire.
All right, that is good advice. What about the second question we should all be asking?
The second question you want to ask the advisor that you're looking to work with, or the one that you're working with now, is are you a fiduciary? And understanding what this means. This is probably one of the most important questions. And the answer, of course, needs to be yes. Now, what a fiduciary is a person or organization that acts on behalf of another person or persons, according to Investopedia, putting their client's interest ahead of their own with the duty to preserve good faith and trust. Being a fiduciary thus requires being bound both legally and ethically, again, to do what is in the client's best interest, not what's in a company's best interest, Chad. And that's another one, Wendy, that a lot of people, you know, really have no idea. What am I paying in fees? Am I working with a fiduciary? And a lot of advisors will say, yeah, I'm a fiduciary, but you really have to look and pull the curtains back, Chad, and really take a look at that.
Yeah, and as you mentioned, we have seen a lot of people, a lot of advisors will say they are a fiduciary when in fact, they're not. And I think you need to be aware of what a fiduciary is. And actually, it's an advisor working underneath a registered investment advisory firm, and they are an investment advisor representative of that firm. So again, it may sound a little confusing, but at the end of the day, it's pretty simple. Are you a fiduciary or not?
All right, I did not know what a fiduciary was when I met you guys, so that's definitely a good question. What about the third question we need to ask?
The third question is, what does your firm provide? Of course, you're dealing with a financial advisor. They deal with financial advice, right? Well, when you're working, you're focused on, in your 20s, 30s, and 40s, you're focused on growing and building your nest egg so you can even think about retirement. So you want to go to an advisor or a firm who focuses, number one, on growing your money. But this is not what you should be looking for when you retire. Your mindset and the way that you invest will completely change. You have to think a lot more about growing the money. Now it's about holding on to that money and making sure it lasts throughout the rest of your life. And when you and your spouse do decide to walk out on life, you want to make sure it's passed on to your beneficiaries in the most tax efficient manner. So there's a lot more planning that goes into it other than just grow your money, Chad.
Yeah, and I think earlier I mentioned, the other evening I was watching a financial show, and it was more geared to the growing your money and that younger investor. But as a retirement planning firm and focusing on retirees, there's a lot more that goes into. You have to think about legacy planning. You have to think about protecting your assets for long-term care. You have to think about how to properly get income out of your portfolio in the most tax-efficient way, not to mention the other items that Chad just mentioned. So, retirement planning is more of a holistic view and checking boxes off.
All right, good information. To download our free white paper today about the value of an objective opinion, visit slagelfinancial.com/empoweryou. And coming up on Chalk Talk, we're going to help you determine how and when to know when you have the right answer. Right advisor, that is, for you. The right advisor for you.
That's right, with the right answers.
Right.
Let's go.
He's such an involved dad. He's always telling the kids stories. I remember when so-and-so said I couldn't do this or I didn't make this team. That's what drives him. In our family, we always tell our kids to stick up for each other, stand behind one another. He feels it's his role to provide, keep us safe, and to make sure that the kids are taken care of. A lot of Chad's clients have the same traditional values, and he bonds with them. Each family has a different set of circumstances, and each family is unique and different. The common thread between all of Chad's clients is that they want the best for their family, just as he would our own family.
Welcome back into the Chad Slagle Show, coaching you to and through retirement. So we just discussed some critical questions to ask when interviewing new advisors or speaking with your current advisor. Now we want to help you determine how and when to know when you have the right advisor for you.
Wendy, finding a financial advisor can feel overwhelming. After all, your advisor will know all about your finances and help you make some big investment decisions. You want someone you can trust to communicate consistently with you, where your intuition feels right and you believe the advisor and firm you're working with is a good fit. And whether you're interviewing financial advisors for the first time, reevaluating your current advisor, or just wondering what to ask at your regular meetings, you need to feel confident that they provide the services that you need in order for you and your family to be successful in retirement. So we want to help you and discuss that in further detail, Chad, and we talk today on the Chalk Talk segment, kind of a continuation of the questions you need to ask, but really digging in and really, defining exactly what that means and what that means for you when it comes to finding that right advisor or educating yourself on the current advisor that you have.
Well, and I think we've heard you say a lot of times retirement is almost like 25 to 35 years of unemployment. And I think when we think about this, retirement it's true, it could last another 25, 35 plus years. And you want to find that advisor, that firm that's going to be there for you for the long haul.
All right, so how and when do you know you have the right advisor?
So as we talked about earlier, Wendy, how do you get paid? The first thing you need to understand is commission-based versus fee-based. Commission-based, like we mentioned earlier, advisors that put you maybe into loaded mutual funds, either a load on the back side or a load on the front side, and they receive commissions right up front for them before your money ever goes to work for you. If you have a fee-based advisor, that advisor charges you a flat fee for money that you have in the market. And let's say it's a 1.5% fee. And the key is if you make money, they make money. But if you lose money, they lose money as well, Chad. So they have a little skin in the game, if you will.
Yeah, and I think, when we talk about commission versus fee-based, it is important. And to look for, when you're managing money in the stock market, look for that fee-based advisor. It kind of puts them on the same side of the table as you. They have skin in the game, as Chad just mentioned, when it comes to your money and them managing your money. And I think if we are going to use some commission-type products on the insurance world, have that advisor be very transparent and be independent to where they can go out there in that universe. If you don't want money in the market and you want some more safety, be able to use some no fee or some type of insurance products to give you some safety, but you have to understand, and they're transparent, that those products may pay a commission to their firm out of their back pocket, not out of your money.
And as you mentioned, Chad, you want to make sure you have an advisor that works in all three worlds, the banking world, the Wall Street world, and the insurance world. Unfortunately, a lot of advisors only work in one world, and in order for them to have and do what's best for you, they have to have the whole financial universe at their fingertips to do what's best for you and what's in your best interest. So you have to make sure they work in all three worlds.
Okay, so what about the are you a fiduciary question?
So when we talk about fiduciary, you need to understand, again, the difference between the fiduciary versus the suitability. Again, a fiduciary, they have to do what's in the client's best interest, not what's in a company's best interest. As I read that definition earlier, of course, according to Investopedia, suitability or brokers work for broker-dealers whose interests they serve. They follow a suitability standard, which means only that transactions must be suitable for clients' needs. And I think that's one of the important things, Chad, is broker-dealers can sometimes find themselves in a conflict with their clients who feel that they're selling a certain product because that's what the broker-dealer tells that broker that they can or cannot sell. And I think that's what's important to understand when you talk about fee-based versus commission-based.
Yeah, and I think one story or kind of to keep it simple is we talk about going into the meat market or the butcher shop, right? And we're going to go in there to buy meat, and that butcher shop is going to sell us meat, and that's really what they have. And so when we go into the butcher shop, their job is to sell us that meat. And I think, that's that idea of the suitability standard. We're going into that advisory firm, and they're going to sell us what they have to sell us. Now, on the other side of things, when you go into a dietitian and you ask for some meat, that dietitian is going to look at all of your health, look at some of the past health, and they're going to kind of evaluate what is best for you. It may not be meat, it may be fish, it may be other things. So that dietitian is going to look at everything and then make that recommendation based on what's best for you. And I think that suitability versus that fiduciary standard, it's a good example of comparing the two.
The butcher shop versus the dietitian. There you go.
It's a good comparison there. What about the last question? Very, very important. What services does your firm provide? Very
important as you get closer to retirement. When it comes to investment planning, when you're in your 20s, 30s, 40s, and 50s, investment planning equals accumulation specialist. It's about growing your assets and getting to the point where you can retire. However, once you get to retirement, it needs to be about preservation and distribution, about that holistic plan. Your retirement is a lot more than just investing and growing your monies. It's about having a tax strategy, not only for you, but also for your beneficiaries. You need to have an estate plan. If something happens to you and your spouse, how are your assets going to be left to your children and your grandchildren in the most tax efficient manner? When you get older and you reach 65, you're going to go on Medicare. Then you're talking about health insurance. You're no longer on your company plan, so what is the right health insurance to have? So it's a lot more than investment planning. It's about having that holistic approach and looking at all angles of retirement, not just about the monies that you have.
Well, and I think just real quick myself, I'll be 41 here soon. My focus is growing our assets to get to retirement, and that's my focus, my family's focus. 3 kids to get them through school and off to college. But for our clients and my parents, it's about how are we going to get income out of the portfolio? What kind of legacy do we want to leave for our family? What taxes are we paying? And do we have the proper health care and long-term care in place? So there's a lot more aspects to the retirement side of planning than what I'm dealing with right now for my own situation.
I'm a little closer to what your parents are. All right, another reminder to download our free white paper today about the value of an objective opinion. Visit slagofinancial.com/empoweryou. When we come back on our strategy play, the Chads are going to show you the different ways that advisors get paid and how their fee structure can affect your portfolio.
The number one concern of retirees today is outliving their hard-earned dollars. It is more important now than ever to educate and empower yourself to make better decisions with your monies that it has taken you 30 to 40 years to accumulate. How do you do this? By using our Financial GPS, our guided planning system. This is a 4-step process to help get you successfully to and through retirement. The first step in this process is to create clarity. Here we will help identify your goals as well as your concerns and identify what you want to accomplish in retirement. The second step, we will analyze the risk you're taking with your current portfolio, and this step will also identify exactly what you are paying in fees. In the third step, we will evaluate and assess your current plan and help identify the gap between the missing pieces. And in the fourth and final step, this is where we will work together to implement a plan of action to accomplish your retirement goals. And this process can take place at any one of our convenient locations in Missouri, at our Creve Coeur and Sunset Hills offices, or in Illinois at our Edwardsville, Springfield, and Jacksonville locations. So call now to get set up on the right path on your journey through retirement. Welcome back to the Chad Slagle Show, coaching you to and through retirement. On this week's strategy play, we're going to show you the different ways that advisors get paid and how their fee structure can affect your portfolio and this money that you've worked all your life to accumulate, Chad.
Yeah, and I think, when we talked about in the show, there's 2 different types of advisors that you have the ability to work with out there. And I think digging into how they're paid, what fees you need to be aware of, and really how it affects your portfolio, we'll dive in here in the strategy play and kind of give you a good point of view for this.
Right, Chad. So we talk about option 1. And option 1, when you have an advisor that has to go by that suitability standard. In other words, they work for that broker dealer. And really, Chad, they're limited in the investment products they can offer you. In other words, they don't have the whole financial universe at their fingertips to do what's best for you. And we talk about that, Chad. A lot of times those limited options are in the form of open-end mutual funds. And the problem with open-end mutual funds, Chad, as we talked about earlier, you're going to have an A, a B, or a C share. So you're going to have a load to get in on the front side, or if you take your money out in the first 6 to 8 years, you may have a load on the back side. The other problem is, Chad, you're going to have fund expenses. Mutual fund expenses, on average, according to Morningstar, is 1.3% a year. So above and beyond that load to get in or get out, they charge you an additional 1.3% plus a turnover ratio on average of 1.4 and then another 12B1 fee, Chad, of 0.5%. So overall, that's over 3%. They're charging you each and every year, whether you make money or whether you lose money, not to mention, Chad, as you talked about earlier, that load to get in or get out.
And I think just what you mentioned, whether you make 20% or whether you lose 20%, in this scenario, they're going to get their 3% plus in fees plus whatever load on the front or back end that you already paid. The second option we look at is that fiduciary standard, Chad.
And with that fiduciary, Chad, they are supposed to do what is in your best interest, not what's in a company's best interest. So as we said earlier now, they have the whole financial universe at their fingertips to do what is best for you. In other words, they're going to deal with no load funds, no load to get in or no load to get out, so you don't feel stuck. Also, you have none of those other than the mutual fund expense. It may be in an index fund. It may be an ETF. It may be in individual stocks. So your fund expenses are really nil in 0.2% according to Fidelity Investments and Investpedia. And of course, since you're not in a mutual fund, there's no turnover. There's no 12B1 fee. The only other fee that you would have is a fee that an advisor is going to charge you on an annual basis. So if you make money, they make money. If you lose money, they lose money. So naturally, a fiduciary is going to do everything they can to make sure your money consistently grows year in and year out. And that average fee is 1.2%, Chad. In other words, if you're dealing with a commission-based and that advisor that goes by that suitability standard, they're going to be charging over 60% more in fees each and every year as opposed to that fiduciary.
Yeah, and I think as you see here, that 1.2%, that also varies based on the value of your account. If you're going up or going down, that 1.2% is based on that value, so that advisor has skin in the game. And I think, as you just mentioned, one key thing to take away, that's over 60% of a savings that really could impact your portfolio over the long haul.
And another key to point out, just because somebody's a fiduciary doesn't mean they can't be charging you high fees. So we're not saying that's the only way to go. You have to understand and educate yourself what kind of advisor you're working with, but also what are they charging you in fees and why are they charging you those fees? Are you paying excessive fees that could be cutting into your overall nest egg? Are you looking for an advisor and firm that is looking out for your best interest? If so, we encourage you to give us a call today, and that's this week's Strategy Play.
To get more detailed information on these strategies and how they can work for you, call the team at Slagle Financial now to schedule your 5-point inspection at 888-294-9248 or email at info@slaglefinancial.com.
I'm your host and coach, Chad Slagle, and joining
I'll be with you guys in just a few minutes.
When it comes to your health, your life, your family, your home, and your hard-earned dollars, of course you want to make sure you're working with that sharp, energetic, knowledgeable individual that is always looking out for your best interest.
Such short notice, appreciate it.
Thanks. It's time to get your financial house in order. This is the new age of retirement planning. In the Wall Street world, that's what they talk about. You got to have equity.
Back into the Chad Slagle Show, coaching you to and through
We
retirement.
are Slagle Financial. Call now, 888-294-9248.
Welcome back once again to the Chad Slagle Show, coaching you to and through retirement. We've covered a lot today. What would you say, Chad, are some of the key takeaways from the show?
Number one, know the different fees that your advisor is charging. Number two, understand the differences between the fiduciary and suitability standard that advisors are held to. And number three, Wendy, make sure the advisor and firm you work with will provide a holistic approach for your retirement.
And today we did cover 3 critical questions to ask advisors. And if you found those helpful for your current situation, you definitely want to check out Chad Slagle's book, Winning in Retirement When Every Day is Saturday, where he goes over the top 10 questions to ask potential advisors. It's available at Amazon.com and in most bookstores. Be sure to download your free sneak peek today at slaglefinancial.com/book. And the Slagle Financial team and their team of advisors have educational events coming up in your area to make sure you are prepared for today's retirement. For more information and to sign up for one of these events, call 888-294-9248 or visit chadslagleshow.com.
Remember, folks, success is waking up in the morning, whoever you are, wherever you are, no matter how old or young you are, and bounding out of bed because there's something out there that you love to do, that you believe in, that you're good at, and you can hardly wait to get at it again today. At Slagle Financial, realize that this is bigger than our team. It's about educating you, the public, and our wonderful clients, and empowering you to make better decisions with your hard-earned dollars. For my colleague Chad Tobin, my co-host Wendy Erickson, this is the coach Chad Slagle. Thank you very much for joining us. We look forward to visiting with each and every one of you next week.